the Nigerian economic space, at least for Q4 and Q1. So just I have to I'll try as much as I can to do justice to this within sorry, I don't know, I think my screen for some reason has stopped sharing. Um Let me reshare. Sorry.
Okay, but actually good on our side, but
Okay.
you can.
So can you hear me now? Can you hear me?
We can hear you clearly. Please go ahead. Okay. Um, I believe Deborah is having some technical issues. I really
I'm
wonder
sorry, I
why.
apologize. I'm having
Okay,
network
Deborah.
glitches. My network is
Okay.
coming off and on. So I'm trying to see if I can switch network. But please, if you can hear me now, let me know, please.
Yes, we can. We can hear you and we can see your screen. And we are pumped to
Okay, thank
go.
you very much. All right then,
Thank you.
thank you. So you would find that the Nigeria real GDP expanded by 3.84 year on year in the Q4, and I know everybody will be wondering now, saying, oh, we'll say that inflation has risen and all of that. So this is some of the factors that would lead to that. So you find that the service sector has contributed greatly to the growth of the Nigerian GDP. You find that the full year GDP growth stood at about 3.40, so making an improvement of about 60 basis points over what it did in 2023. And you would also find that some of the sectors that led to significant growth in the GDP would include crop production, trade, the telecom sector, real estate, financial institution, the crude and oil, and the crude petroleum and natural gas. You'll find out from my side that all of these have, one way or the other contributed to the growth of the GDP experienced during the Q4 2024 and going into the Q1 2025. You would also see here that inflation has risen, as we know, and as at March 2025, the inflation rate stood at about 24.23. And in January 2025, you find that the NBS, that's the National Bureau of Statistics, rebased the Consumer Price Index, updating the base year from 2019 to 2024. And then we'll see that there's been a significant rise in inflation, even though the federal government tried to mitigate it to say that things are a bit um stable so that the economy can be better fit for the Nigerian citizens. But overall, the first quarter of 2025 saw a recalibration of some sorts in the Nigerian inflation due to the rebasing exercise. We would also find that the monetary policy in Q1 2025, they maintained a cautious stance amid ongoing economic challenges to ensure that rates are remain unchanged. So the rates remained unchanged, and then it was reported to about 27.5 during that period. That's for Q1 2025. And for oil, foreign reserves, and exchange rates, we all know that one way or the other, the prices of crude oil continues to affect our FX in Nigeria, given that we are relied solely on it, and this one way or the other would affect the rising of the naira, as against the dollar. So you find that as at Q1 2025, the NFM rate stood at about 1,538 to $1. So well, we are looking at Q2 2025. The domestic economic outlook for Q2 2025, we'll see that we expect that the monetary policy be data driven, and then we'll focus more on managing inflation, fostering economic stability, and supporting the exchange rate. CBN would want to take decisions that would likely reflect these priorities, while they monitor what's happening domestically in Nigeria and also globally. We envisage that by 2020,
It's like we've lost everything.
Hear me? Can you hear me now?
Now we can. Yes, we can.
Yeah.
Please go.
Okay. Thank you. So apologies for the glitch in my network. So I'll keep trying to switch between networks. So the exchange rate. So we see that we expect that in this Q2 the naira would see some sort of slight depreciation. However, the outlook would largely depend on the effectiveness of economic reforms, global oil market trends, and continued investors' confidence. So for economic growth, we expect that this Q2 will remain optimistic, and this will be shaped by persistent domestic challenges and global uncertainties. For the fixed income markets, we expect that the government plans to raise about 900 to 1.2 billion through domestic bonds, and I think that's already on the way. See, I think they're trying to raise about 300 billion naira, or highly volatile. So if we look at what the impact of the economic volatility would have on traditional investment approaches, we'll see that for naira assets, there might be reduced real return. If you factor in inflation and all of that, you'll see that you might not really be getting the value that intended, even though the rates are a bit high from what we see, especially from treasury bill issuances and commercial paper issuances. So equities, you might see increased risk aversion. Any investors might want to move away from the stock market. Seeing that for it's volatile, and the predictability is quite low. And for bank deposits, the truth is that there will always be negative real returns, again due to inflation outpacing interest earnings. And cash hoarding, I mean, this is very relatable. You see people saying that, oh, wait and see, let me see what's going to happen in the next quarter, or in the next month, or in the next, before they will put in their funds, and then we'll continue to just see idle funds lying around. So this why diversification and alternative investments matter now more than ever is you'd say that the truth is diversification reduces concentration risk. That's the truth. So you need to start looking, as investors or would be investors, we need to start looking at how we can combine local and offshore investments together, so that we can be able to improve our portfolio and have some sort of stability. And for alternative assets like dollar mutual funds, which we'll be speaking so much on today, you find that it can help you protect against naira depreciation if you diversify into that space. And money markets and short-term duration fixed income funds too would also provide some sort of liquidity and stability. So another alternative asset is to look at multi-currency exposure. This will help you preserve real wealth, especially with clients who have USD obligations, or offshore plans. For those of us who plan to maybe jackpot, or school abroad. So I'll just round it up here and say thank you very much.
Okay, thank you so much, Deborah. I know you have said quite a lot, right? In just 4 slides. I would ask one question. So, in simple terms, what does this mean for the everyday investor? I hear you where you say we are all now in a wait and see mode. Um, so, what does that imply, or what does that mean for an everyday? Because we have in this audience people, um, investment types from various with various risk appetites. Yes. So, would like to ask what um, that means for an everyday investor.
Okay, so I'd say that like we have seen, thank you very much, Etim. So like you've seen from the Snapchat chats, the shots that I shared, you would see that the economy is very unpredictable. That's the truth. And you can attribute this to the different happenings, whether globally or even locally in Nigeria here. So what would the advice be for an everyday investor?
We're losing you again.
knowledge, our know-how. Can you hear me?
Yes, now we can hear you now.
Okay, yes. So for everyday investor, for an everyday investor, the idea is, to continue to brush up your skills on, the best investments that best suits what you want to do. I mean, just as nairaCompare and PAC Asset Management has put this together now to educate people on what they can do with funds. I mean, there are a lot of people. You will find that a lot of people are still very unaware on how you can, make your money work for you. So what I would say is that, given the unpredictability
We've lost you again, Deborah. Okay. All right. It seems, Deborah,
of,
you still have your
okay,
network
yes, I'm back again.
Okay.
Yes, I'm
So
back again.
you just
I
hit your
apologize.
last line.
Yes.
You were about to hit the nail on
Yeah,
the
so
head.
when we
So
have
yes,
viable investment opportunities, like I mentioned, we should please key into it and try as much as we can to brush up our knowledge and skills on them what is happening as it pertains to the economy. Thank you.
thank you so much, Deborah, for that. So I believe that we've sort of framed the landscape in telling us we need to diversify, we need to get more information so that we can make smart choices and smart decisions. So we're just going to go quickly and get right into it to talk strategy. And Henry will be breaking down money market and fixed income funds for us, what they are, how they work, and how to use them wisely. Some people say 22% a year, others say 21%. We want to know what PAC says. So we're happy to dive in now. Um, Henry, are you on the call? Please, you have the floor. Thank you so much. You can use the chat, please, to, you know, welcome Harry with a round of applause. And let's also not forget to use the polls. We have polls, right, going on. Just keep doing that. It helps us know exactly where we are. Thank you so much. Harry, please take the floor. Thank you.
Yes, good afternoon, everyone. And thanks for the privilege, the opportunity to make this presentation. To start with first, this is PAC Asset Management, and so I'll just briefly speak to talk about the company, after which we dive right into the different products. Yes, so our vision is to be a leading asset management firm across Africa. So we'll go straight to about us. PAC Asset Management is an integrated asset management company that offers traditional and non-traditional investment products and services to clients. The company is licensed by the SEC, that's Security and Exchange Commission, to conduct businesses as fund and portfolio manager in Nigeria. We are a member of the Pan-African Capital Holding Company, and we have diverse investments in securities trading, asset management, private equity, registrars business, hospitality, and agri business. PAC Asset Management is currently is a company with over 15 billion asset under management, and we have a track record of over 12 years. PAC Eurobond was awarded the best fixed income fund in 2023 at the annual Global Banking and Finance Award held in London. And also in 2022, the Eurobond also was awarded the best Eurobond in the country. Yeah, so this is just briefly about our different subsidiaries. I mean, we are into a lot. I wouldn't want to waste time on this. And this is about our track record moving from 2012 till date. Yes, so our value proposition, what PAC it's going to offer the respective investors or prospective investors. Very importantly, we have well-dedicated relationship managers that would handle your portfolio. These relationship managers are very experienced, and of course, they would inform you, profile you, of course, and get to know the instruments in which you'll be invested in. And very importantly, we have an up-to-date technology with our web and mobile app. You can, of course, access our products, buy and sell our products.
Sorry to cut you short, Henry. Could you put your slides in presentation? It's difficult to.
Sorry, I didn't get that.
To put the slides in presentation mode, please. That's the icon at the bottom. Yes, great. Thank you. Thank you, Henry. Please go ahead.
Yes. Hope you can. Yeah. Yes. So we'll be diving right deep into the benefits of investing. And just as Deborah has said, there are lots and lots of benefits in investing. Very importantly, I'd want to note that some people don't know about investing and they believe that leaving their money in the bank is the best thing. And today I want to tell you that it's very wrong to leave your money in the bank. This is because funds left in the bank, of course, they are locked to buy treasury bills, commercial papers, and the likes. And the bank ends up making more money. At the end of the month, of course, you pay management fee and you pay other fees. That is not a very smart move because your money is not working for you. So in this discussion or meeting, we'll be talking about the benefits of investing. First, wealth creation. Investing allows your money to grow. Yeah, of course, it allows your money to work for you and allows your money to grow. Things you get from investing are things like capital appreciation, you get dividends, and of course, you get interest income when you invest. And very importantly, I want to talk about the effect of compounding when you invest. Compounding means upon your principal, you earn interest, and if the next day, or if it's a daily compounding, the next day, the principal and interest becomes a new capital for investment. And if you hold this over a period of time, your returns on investment becomes very, very significant. Another reason or benefits why we should invest is also to beat inflation. Deborah also equally said that also. Inflation in Nigeria is currently at double digits, and it's really unwise not to invest. Leaving your money in the bank wouldn't be the best move. You need to invest so that you can mitigate or probably reduce the impact of inflation. Another reason why we should invest also is achieving our financial goals. You want to buy a home, you have to invest. Education for your children, you have to invest. Retirement, you have like 5-10 years to retire, you have to invest. Putting your money aside in a mutual fund that, of course, compounds daily, monthly, it's the best move to be able to secure your retirement. Of course, business expansion also, you have to invest. Yes, so how does mutual funds work? Yeah, mutual funds are investments. Mutual funds is an investment product that trades in diverse holdings like T-bills, bonds, treasury bills, and real estate and the likes. That's to say that two or more persons come together. Of course, they can't two or more persons that can't buy a T-bill or treasury bills. They come together, they mop their money together. The alliance and the synergy. With that, they are able to get this instrument, and over a period of time, the interest of this investing is distributed amongst them all. That is what you call a mutual fund. So I talked about the benefit of compounding. This is what you get when you invest in the money market fund. We'll get into money market fund, but I just want to tell you, there's something you are missing. I'm sure you can see the table. Can you see the table?
Yes,
Hello,
Harry.
can you see the table?
Yes,
Yes.
looking
So
good.
benefits of compounding. Compounding amplifies your earnings. That's to say that if you can save 5,000 naira on a monthly basis. At the end of the month, or probably at the end of the year, what you should be getting is around 60,000 naira. But compounding amplifies it. It increases it beyond 60,000 naira. If you now leave it for probably 5 years, 10 years, and the likes, what do you get? You get far more than what you have gotten if you are just invested in a simple interest, probably getting just simple interest. Now, the table here shows the effect of compounding. You can see with the principal of 500,000 naira, invested at 19% for 20 years. What do you get? You get 2.4 million. Wow, that's a good return on investment. But have you thought about looking out for the impact of monthly compounding? For monthly compounding, if you invest that 500,000 naira at 19% for 20 years, you get about 20 million naira. 5 million naira. Let's look at 5 million naira. For simple interest, that's 24 million in 20 years. And that's a good return on investment, but you're missing out something. What about compounding? When you compound that same money, you're getting above the 200 billion naira capital. Yeah, the next is 50 million, and that is the way it goes. This is the effect of compounding. And today I bring to you one of our products which is called the Money Market Mutual Fund. That's the PAC Money Market Fund. With the PAC Money Market Fund, you can plan retirement. It's very easy to plan retirement. You can, for example, you have children, 2 or 3 kids, you are looking at probably sending them to, maybe you look at sending them for the education in the future, and you can invest in the money market. You can invest in the money market. What is the money market fund? The money market fund is a collective investment scheme that invests in high quality short-term money market securities, such as treasury bills, bank placements, and commercial paper. Now, there's free entry and free exit whenever you invest in the money markets. It has a medium risk. That's to say that the risk on investing is very, very, very low. You won't lose your principal, unlike probably investing in equities market, stock market, and the likes. Sometimes in real estate, sometimes you lose the land. But in the money markets, you don't lose your principal. Your principal is secured. And in addition to that, you get daily droppings of interest. On a daily basis, you see your interest hit your account on a daily. And as a matter of fact, the company comes here, when this interest hits your account, this interest, of course, is reinvested. And that is how it goes day after day, month after month, year after year. With principal and interest, everything, circles in, and return on investment becomes very, very interesting and very massive. Just to reiterate, the money market fund is registered with is regulated by the SEC, Security and Exchange Commission. That's to say that it's secured. Your investment is secured. We have a holding period of that's the minimum holding period is 30 days, and easy entry and exit. At the moment, the money market, our money market is within 19 to 20% return on investment. Yes. And so I'll be talking briefly about the fixed income fund. That's the next one because of time. I'll be going to the fixed income fund. The fixed income fund is typically it works the same way the money market works, but investing in this fund, the underlying instruments are typically bonds, sovereign bonds, corporate bonds, and supranational national bonds. It is very suitable for those that have long-term investing. I mean, you are looking to invest for a long time. It's a very good way and product to invest in. And as a matter of fact, our return on investments currently is around 10% return on investment, and the minimum holding period for this product is 90 days. So to wrap it up, because of time, I'll just say that it is wise for people to make their money work for them. Leaving your money in the bank is not the best. As a matter of fact, just to reiterate, the bankers would use your money, use your money for investments in treasury bills. In fact, they'll give out your money or give out your money and get very interesting returns from borrowers and the likes. Now, making your own money work for you is as simple as reaching out to us, opening an account with us, and investing your money in mutual funds. Well, this brings me to the end of my presentation, while Debbie will talk about the PAC Eurobond Fund. Thank you very much.
Hey, thank you so much, Harry. I want to believe that all our attendees today are taking something already. I hear you, I see the numbers, and they look good. So it means that if you're keeping your money in a traditional bank, you may need to do everything at this moment. We can see the huge difference in when you had saved, invested in a product like PAC Money Market Fund. Okay. Thank you, Harry. We're just going to go right into it quickly. I'd have liked to ask one or two questions, but I would leave that to so when we are doing the panel section. By the way, we're going to have a panel section where you're going to have the opportunity to ask your questions. There is a Q&A button right after the chat button. Please, you can begin to drop your questions as the presentation is going on so that we can take them. And if you see somebody's question that you like, you can upvote on that question so that we know that it is a need for most people on the call. So thank you so much, Henry, for that. That was very insightful. We're going to go right into dollar funds, which I believe is a hedge against naira devaluation. So Deborah is going to take this for us to show us how dollar-based investment can help hedge against naira fluctuations and protect value. Deborah, are you here? Yes, I see you. You have the floor. Thank you so much. Sorry, I'm muted, Deborah.
Okay. Can you hear me now?
Yes, clearly. But there is an echo. You might need to.
Please confirm that this echo has stopped now.
Okay, yes. Thank you.
Okay. So I'll just delve right in. But while I'm going over my presentation, I'd just like us to think about this. A rich man took all the money in the world and divided it equally among everybody. It will soon be back in the same pocket it was before. I just want you to think about this. If you can quickly take a screenshot of this of them so that in your quiet time you can reflect on this. So and then there's a quick self-evaluation, and this will bring us to understanding what volatility really means for investors. So I want you to think about this, when next, or when you decide that you want to make your investment decision, or you want to put together your investment goal or strategy. I want you to think, like, do you have a well-defined or written personal financial goals? Do you keep records of your income and expenses every day or month to month? Do you have sufficient life insurance coverage usage? Do you have at least 500,000? Are you satisfied with your present financial condition? Have you bought a land or a house, or have you built a house? Do you have at least 10% of your salary every month? Do you save at least 10% of your salary every month, or do you have any savings towards your children education? So when next you're thinking and you're doing some self-evaluation, and or you're thinking about, okay, the economy is volatile, do I invest or do not invest my money? I want you to ask yourself some of these questions. So I would go straight into, why you have to use dollar investment as a leverage in a volatile economy. You find that in a volatile economy, especially one that is marked by currency devaluation, like we have with the naira, and in Nigeria, you find that inflation and uncertain fiscal policy can tweak what it is that we had initially planned for our financial goals, or what we put down or pen down as how we intend to grow our wealth for maybe a certain period. So you also find that the dollar denominated funds can serve as a powerful investment leverage. And I always say something to people that if you invest in USD, I mean, you can never go wrong with a dollar denominated investment. That's what I like to tell my clients. I like to tell prospective clients that are looking to diversify. So, using dollar funds as investment leverage in a volatile economy, these are some of the things that it can give to you. It can give to you currency edge and capital preservation. So what does this mean? When you invest in dollar funds, it protects against local currency depreciation. For instance, the way we have with the naira. And how does it help you? In a weakening local currency environment, whether in Nigeria or anywhere in the world, it gives you some sort of, it helps you preserve your purchasing. And the example would be, if your local asset loses about maybe 20% due to inflation or FX volatility, a stable or appreciated dollar fund provides a buffer or even gains in value. We'll see that in the past three to say maybe 2 to 3 years, we'll see that there's been a lot of FX gains for people who have before now seen who had the foresight of what to do with their USD investment. You see that there was a lot of gain, capital gain for investment for investors such as this. So you find that people were just selling their dollars and smiling away. You get confidence in the hard currency too when you diversify and leverage USD. What does this help you do? You get to earn your returns in dollars. I mean, it helps investors to compound return in a stronger currency. So you can imagine if you in Nigeria invest US, you see nothing beats it, because you have been able to make some compounding returns in USD, and we have also made compounding returns in naira. So vis-a-vis, if you had both together, you would say that it gives you some sort of gains as it translates to higher nominal returns locally. So it also helps with liquidity and flexibility. So what does this mean? Most dollar funds offer quarterly semi-annual. You find dollar for PAC Asset Management Limited. You find that a dollar denominated investment, which is the PAC bond fund, we get to pay you a coupon annually. If you decide to choose fund product, non-fund products for USD, you can get to earn your coupons annually, yes. Or maybe if you want to place it, you can decide that you want to get your returns every quarter. So this can help investors to rebalance or reallocate their capital based on market shift. So you can use by doing this, investors can use their USD funds, to proceed to strategically buy local assets at discounts during downturns. So another thing it can help you do again is to smart deployment for dual portfolio strategy. When you combine, I mentioned earlier that when you combine your USD and local currency, I mean, nothing beats it. It just shows that you're on top of your investment goals and strategies. So another thing again is that it creates some sort of attractiveness for international investors and dollar-based planning. So this, for most people, especially for high net worth individuals or maybe diaspora investors, you find that they leverage USD investments to build some sort of strong portfolio for themselves, to build some sort of strong investment portfolios that they can use to, whether they want to do business or go and study abroad, as it were. So it enables financial planning that's globally relevant. I mean, if you have a USD portfolio, you would find that it's very easy for you to make decisions when it comes to maybe when it relates to something that would take you outside your local abroad. So, what are the strategic tips for using dollar funds effectively? You can combine conservative USD funds with high growth. It will help you to, it will help you to manage your risk accordingly. You can also allocate more funds. You can allocate more to dollar funds. So there's something we call asset allocation. So when you're doing this, another way that you can leverage USD against the economic volatility is to try and allocate more or of your investments or your portfolio to be tuned towards USD investments, funds for medium term goals. I mean, I'd mentioned when I was taking one of my presentations that look, you can, if you want to school abroad today, or you have plans for your children to school outside the shores of this country, or you want to say maybe travel, you have vacation dreams. It's not. There's no better time than to start saving than now. For us at PAC Asset Management Limited, our PAC Eurobond fund as low as $1,000 journey from there. And the beauty of it is we're flexible because we are particular about your financial growth, about financial fitness, about your wellness, about literacy, about helping you achieve your dream. One of the things we can always build something for you. We can also always structure something that fits into your investment goals or strategy, as long as it helps you achieve your investment goals. I mean, will help you align our strategies with yours. So you can keep a portion of your emergency fund also in USD for better liquidity and capital strength in local crisis. So let me give us as a wrap up, let me just give a real world case. So let me use the client example. So for instance, if you're a Nigerian entrepreneur with Naira income, so what you can do is, or maybe what you've done is you've allocated 40% of your total portfolio into a USD fixed income fund. And you'll find that at the end of the day, like I mentioned earlier, so people who invested in USD maybe about 4 years ago, as at 2023, 2024, I mean, it was huge. There was a very huge capital gain. So you will see that one naira has lost maybe 25% in value over 12 months. Find that for the in the USD fund that has delivered maybe 6% USD yield. So that's like giving that client about 30% naira equivalent gain. So you've used dollars to the dollar fund to proceed to buy distressed naira. You understand? So for that that has some sort of way helped you to gain some sort of leverage against whatever is happening with your local currency. So I'd just like to mention that at PAC Asset Management Limited, like I mentioned earlier, we have array of dollar denominated investment that suits every class of individual. And I hope that we'll be having you, as you've gotten some basic understanding of what it is that you can do with USD fund, especially in a volatile economy. Thank you very much.
Okay, thank you so much. Thank you so much, Deborah, for that insightful um, um, presentation on the dollar fund. Okay. Um, we're supposed to go right into the panel discussions, right? But I'm going to take a few minutes to tell you the role of nairaCompare in all of this. We have seen what product has PAC actually has for us for the various investment types. But nairaCompare, what we do is that we make financial clarity a lifestyle for you. So whether you're looking for investment options, whether you're looking for loan comparisons, whether you're looking for free tools like credit score or credit reports, which always drive your loan approvals, we help you make those decisions, right? On nairaCompare, you are able to see clearly the interest rates, the loan terms, everything, investment yield dates from various top-rated providers. For example, PAC comes highly recommended and stands tall in that list. And so do other providers that we have in on nairaCompare. So think of us as your personal finance sidekick, where we help you compare the products and from these trusted providers, and you can get customized comparisons. So you go in there, you tell us the amount you want, you tell us the duration you want it for, and what the platform does is to use intelligence to supply to you options that match what you want. So whether it's your money market funds or your income and dollar funds, we've got them all. So you have transparency on that platform. You can see everything at a glance, the rates, terms, fees. You can see all at a glance. And that was part of what Deborah had said, that in this economy, you must make informed decisions. So it's not just hearing and moving. It's actually carefully, taking the plunge, and you must take it based on information. And at nairaCompare, you are able to see clearly what to do and with whom to do business with. So it is super easy to get on nairaCompare. You just type in the URL www.nairacompare.ng. When you get there, you click on the product. For this webinar, compare investments. Once you click on compare investments, you can see your preferred investment types, whether money market funds, fixed income, or dollar funds. Then you enter how much you want to invest and your risk appetite. And boom, the list appears of providers. Of course, like I said, PAC is top, highly recommended for you to go and select. Once you do that, you proceed right there to invest. Our customer support team are highly on ground to guide you through the process. What I'm saying is that it's just one tab, and from that one tab, you have endless smart money choices and money decisions to make. It's up to you, right? The URL is www.nairacompare.ng. There you will find the investment providers that are relevant to you, and of course, PAC sitting at the top of the list. So please go there, take action. We don't want you to just be loaded with information. We want you to take action. All right. Thank you so much. I believe the URL is in the chat, www.nairacompare.ng. Feel free to go there. If you have any issues at all, let us know. Contact information are right there on the screen so that our customer support team are here to guide you through the process. So we're happy to have you. Okay, so we're quickly going to the next item on the agenda because we really don't want to bore you with too much taken, right? And this session, I know that you would really enjoy because it is here that we ask questions, the right questions. So it is the panel session. So I'm just going to turn my camera and ask Henry and Deborah to do things so that you can see us. I've looked in the chat and the Q&A section. I've seen some questions already there. And Deborah and Henry, we want to begin with the typical Nigerian question because any investor is thinking money. And if I put money here, what will I get? The question I see here is which has the higher return? money market funds or fixed income? I don't know, can Deborah help us with that? Which has a higher return? Because we're thinking money and what we get from, investing. So Deborah, can you help us with that? Or that could be Henry's question.
Yeah.
Thank you.
Thank you. Thanks for the question. And just in straight terms, the money market fund currently has, that's the PAC money market fund currently has a higher return. That's it. Our return is within 20%, 19-20%. That's return on investment. As against the fixed income fund, around 10-11%. Thank you.
Okay, thank you so much. So you've heard it, you've heard that money market fund seems to be the path here. You can take action immediately. Remember to use the Q&A chat to drop your questions. We are watching and we'll pick them on the go. So I have another question here, and it says, I keep hearing that money market funds are low risk, but what exactly could go wrong? Can I actually lose my capital? Nobody wants to lose their capital. Henry, can you help us, please? What exactly could go wrong with money market funds, since you have said it's a low risk investment type?
Okay, thank you very much. Typically, the money market fund is a low risk form of investment. And we usually tell our clients that the risk of losing your funds is very, very, very minimal. So the underlying instruments here are T-bills, that's Treasury, the Nigerian Treasury bills, and the commercial papers. So as long as Nigeria is still Nigeria and will remain Nigeria, so investing in Nigeria, that's the Treasury bills, that's to tell you that there's no tendency of Nigeria defaulting. Over the period, Nigeria has not defaulted, and Nigeria is not bankrupt. Nigeria is not going down. So as long as you invest in the money market fund, your principal and in fact your interest also are all secure. Thank you.
That's interesting. It's an interesting one, people. If I invest in money market funds, my principal is secure. That would spur you to take some action already. Okay, I have one more on money markets, and then I'll just move quickly to the other investment types. So I see this one. It says, if I need cash quickly, say within 48 hours, how easy is it to redeem units from PAC asset money market funds compared to breaking a fixed deposit?
Okay, so thank you very much. So the good thing about the PAC money market fund is that you don't get to pay the pre-liquidation charges you pay when you do a fixed deposit. Usually fixed deposits, when you want to pre-liquidate, very often you pay about 25% of your interest as the pre-liquidation fee. But that doesn't happen with the money markets. The minimum holding period for the money market is 30 days, after which you can withdraw your money, or you can, of course, you need cash for probably an urgent obligation. You can always withdraw your money, and it's the response time is between 12 to 24 hours. You have your money in your bank, so it's very, very quick, and there's of course no pre-liquidation charges. That's why I say money market is very, very good. Thank you.
There you have it. Money market seems to be taking the day, right? So you can, within 12 to 24 hours, if I hear you, Henry, be able to redeem your units, right, from PAC asset money market funds. So that comes highly recommended. So I'll just go to a fixed income fund. Question that we got from the fixed income fund category, right? And here it says, with inflation above 30%, how can a fixed income fund that pays 16 to 18% really help me build wealth? Aren't I still losing purchasing power? Aren't I losing purchasing power? Yes, please.
Okay, that's very interesting. That's a very interesting question. Well, the truth is that the fixed income fund does not entirely mitigate or kneel off the inflation and risks and inflation. but rather it helps to minimize the impact. So at 16% or probably whatever rate, it does not entirely cancel inflation. I mean, being in Nigeria, of course, being in Nigeria for a while, you know that tomorrow you can even see, inflation going, close to 40% or thereabout. I mean, tomorrow things can just change, and it could be higher than what it is. To be frank, it's still better than leaving your money in the bank, because leaving your money in the bank, I mean, you are taking the inflation and risks, headlong, and you are consuming everything. But if you have something to reduce the impact of inflation, I think that's typically a very wise decision. Thank you.
Okay, so we have another question from the chat. It says, considering the low rate on fixed income compared to money market, what will be the attraction to invest in fixed income? So this person is still comparing money markets and fixed income. I think the person is about to make a decision. So, Henry, can you help, please? There's a low rate of fixed income compared to money markets. What would be his attraction in case he wants to choose fixed income?
Okay, thank you very much. Really, there's not so much difference between both. It's just that for the fixed income fund, the underlying instruments are bonds, and sometimes these bonds could be within, short, medium, or long-term bonds. So if you are looking at an investment where your underlying assets is bonds, maybe bonds of corporate institutions, and you probably don't want anything to do with Nigeria, and you think Nigeria is very risky, then I would advise you just look towards the fixed income product. Typically, not so much difference between them, but the underlying assets for a fixed income fund typically are more of the bonds. So if you're looking to have an asset allocation or composition, which is more of bonds as against TBs, commercial papers, or you are looking to do an investment with an asset allocation which does not comprise commercial papers. That's commercial papers being short-term debt instruments issued by reputable organizations. Then I would advise you look at the fixed income fund. Thank you.
Thank you so much. I hope we've helped you, Mr. Godwin, in that regard. And if not, please keep dropping questions. Okay, so I have another from here with me. And the question here is, I bought an FGN, the Federal Government of Nigeria bond, through a broker last year. Is a fixed income mutual fund just a pooled version of the same thing, or are there extra advantages? Did you get that, Henry? Yes.
So can you
okay, so I'll take that question again. This person bought a federal government fund through a broker last year, and he or she is asking if the fixed income mutual fund is just a pooled version of the same thing, or is there something extra about fixed income? I hear you said that it's not so much different from money market, but I think people really want to know where to put their money. So could you help? Is there any extra advantage with the fixed income as against this bond that was bought?
Okay, so thank you very much. Well, it's just as the person asked, is the pooled, I would say the pooled version of it, of investing directly into fixed income products. For those who don't have lump sums, to buy such kind of fixed income products. And by the way, minimum investment in fund is 5,000 naira, and you think you don't have so much. That is where the fund comes in. But of course, if you have a lot of money and you think you want to just take a lot, you have about 50 million, 10 million, you want to take directly, of course, you can go ahead to make such purchase. The returns on investment is still interesting. And of course, we do such here at PAC Asset, we are into treasury bills. We buy bonds for clients. We do a whole lot around investments. And if you have such kind of funds and you think you want to go directly to buy, I mean, it's still a very good decision. Would help you do that. But if you, by adventure, you don't have so much money, and you think and you want to invest in probably a fixed income product, we advise you to come into the fixed income fund with as low as 5,000 naira. You can start your investment journey at PAC Asset Management. Thank you.
Thank you so much. So there we have it. I believe that we're already making our decisions already. Remember that nairaCompare makes it clearer. You can go to the platform to see clearly these interest rates and all the terms and conditions that are required when you want to make decision for either the money market fund or fixed income fund. Thank you so much, Henry. I want to go to Deborah. We have some dollar-dominated fund questions here for you, Deborah. Someone is asking, if I invest in a dollar fund with naira, what happens if the exchange rate moves in my favor? Do I get the FX gain plus interest or just one of them?
Okay, thank you very much, Anthony. So
Sorry, Deborah, there's still
basically,
an
if
echo.
you okay, so I believe this is fine now. So basically, if you have yeah, so if you have you take an investment decision to buy USD and somehow the USD goes up, you will find that from what I had mentioned earlier, people who took positions maybe about 3 4 years ago, and when the USD rose significantly against the naira, they cashed out, as would really see. So I just want us to know that there is never a loss, when it comes to USD denominated investments. So when you invest in that kind of funds, of course, whenever you are going to cash out in dollars now. So
Yeah,
you
of
invested in
course.
USD, so we'll be paying you back in USD. So of course, that gain, that capital gain would have been there, and whatever interest has accrued on your investment within the period that you invested the funds with us, you would also be getting it. So that's how it works.
Oh, so Deborah, yes, I hear you. But we've heard of the minimum balance in all of these investments for FX. So I'm just asking, is there any practical way for small investors to get in on this? Say $100 or $200 or less in investing in FX. What's the minimum that one can do?
So while we have because these funds are regulated, you'd agree with me, by the Security and Exchange Commission, and there's always a minimum threshold. But I had mentioned earlier that at PAC Asset Management Limited, one of the things that makes us stand out and differ is that we work with you. So if you come to me and say, "Oh, Deborah, I have a $500 or I have a $200 and I want to invest. I don't want a life value. I could walk you through if it's up to." So there is so for each unit of USD that you purchase, there's an amount to it. So what we usually do is, we can advise you to, okay, maybe start with the $1,000, minimum, and subsequently, we can advise you to make subsequent payments as long as it can purchase for you one unit of that investment. So we are that flexible. We can work with you to achieve that, like I said. So, and if you have any of such customers, we take this offline. We can look for something to structure for such clients. Thank you.
Okay, so that sounds juicy to me, right? So they're saying, "Come as you are, we will work something out for you." So, in case there's somebody here that's feeling, "Oh, I don't have so much to begin, to invest in dollar funds," they're saying, "Come, there's a way," right? Okay. So I'd like one more question, please. It says, "Do dollar funds protect me against devaluation, even if the fund's underlying assets are euro bonds tied to Nigerian credit risk?" Um, Person is trying to know how dollar funds will help against the naira devaluation. Yes.
Okay, so I want to get that last part
Sorry, it's
tied
still an echo, Deborah.
it should
Okay.
be fine now.
Yes.
So I want to know what the person is saying. So the last part, I didn't get the last part. You said tied to what now?
Okay, so I'll take that again. It says, do dollar funds protect me against devaluation, even if the fund's underlying assets are euro bonds tied to Nigerian credit risk?
Tied to Nigerian what? I didn't get that last part.
Credit risk. If Even if the
Credit
fund's
risk. Okay,
underlying
this is the
assets
way
are
you
euro
work.
bonds. Sorry, did you get that? Did you get the question?
I got that. I wasn't just getting the last phrase. So this is the way USD works. I mentioned earlier in my first question, USD is USD. Whether if you're purchasing, say maybe for instance, one of the underlying assets maybe is a Nigerian maybe a euro bond issued maybe in 2031, maybe issued to mature in 2031 or something. I'm just giving that as an example. The truth is, it's the value of the investment is what you should look at, and that is USD.
Okay, so great.
USD
So we
is the
have
value of it. Is what it is. You understand? So at the end of the day, can you hear me?
I can now. I thought at
Can
the
you hear
point I
me?
thought you had gone quiet. Yes, I can hear you now. Deborah.
Okay, so you will
Please
find
go ahead.
that as long as that currency is USD, if there's the devaluation of naira, you're protected. I don't know if you understand me now. So the most important thing and factor you want to look at is regardless of if the instrument is issued by the federal government of Nigeria or what have you, it is not a naira fund, it is a dollar fund. So if the dollar continues to have an edge or has an edge above the naira, you will always get the value for that USD. So regardless of what kind of asset is issued. I
Thank you.
hope
I
this
guess that
says
yes, I guess that answered the question for Mr. Godwin because he asked something similar. So you said nothing can go wrong with dollar investment. So what happens if the economy peaks and USD to naira crash? What will be my shield for that? And that's a typical investment question. Yes, investors want to know what they get at all times, and they don't want them to lose their money. So he's saying, if it falls, what happens? But now you said it is a dollar fund, right? But you want to speak to that. Maybe you want to say something more about that, Deborah, right? Deborah, can you hear me? Do you want to say something
I
more?
can hear you, Amy. Okay, thank you. So, thank you, Mr. Godwin. I don't know, but him, I like that he's inquisitive. I mean, you need to know these things. So, when I say, the truth is, I mean, yes, there was a time maybe, back then, some years ago, when, vis-a-vis, it wasn't so bad for you or for me if I want to, do a purchase in maybe USD, given the exchange rate, or like what we have now. But for me, I mean, this is my opinion. I would say that the dollar would somehow have a higher purchasing power, as against the naira. So the truth is, no, there's really no investment that you would say, oh, this investment is guaranteed and what have you. Do you get? That's why we have these regulatory bodies that that are there for checks and balances. But the thing is, like I mentioned when I was taking the economy overview and the slides, the thing is, the economy is very unpredictable. You can't say what we can or what happens with investors or those in the research industry is they just try to see what's going to happen today or tomorrow based on what is happening now. And if you look at the trend, you would find that over Mr. Godwin, you know yourself that the dollars for some reason always had the edge. It currently has above the naira. So we continue to keep our fingers crossed. I mean, for if you're going to go to school abroad, you want your child to school abroad. It's not a good thing if you start investing in dollar now. At the end of the day, when the child wants to go, I mean, you will get to pay that money. You won't start struggling to look for naira or what have you. You already have a leverage. So, I
Yeah.
mean, I would like you to look at it from that angle.
Okay, thank you. There's one more question, but just to tell the users that we have the link to PAC Asset Managers products in the chat. You can just click on it, it takes you directly there. So you can see clearly all what we've been hearing. Okay, there's one question I have seen, and now the questions are rolling. Okay. Here it says interbank USD transfers are nearly impossible in Nigeria. How do you accept USD investments? He says now he's giving his personal experience. The last time I tried, I had to withdraw cash and deposit it in the bank of the investment company, which was quite inconvenient. So please, what do we do in this instance where it is impossible to do interbank USD transfers? How can you help him, Mr. Emmanuel?
Okay, so I won't say that it's impossible, right? I think what happens is a lot of us do not yet understand how to navigate around the full details that you need to make an interbank transfer. So that's why you see that even when you go to the bank, you would hear them telling you to opt for the option of, getting what's it called now, your to go to the bank to get your cash and then pay. So what you'd expect to do is to probably you want to talk to, for instance, if you come to me and say, oh, you want to move in some USD and you don't want to go over the counter. So what we can do for you is we'll give you our full correspondent bank details. And then if you know how to navigate your way, using your bank or your app or what have you, it shouldn't be difficult for you. But if at the point of investment, maybe you want to come and invest with us at PAC Asset Management, we would always have options for you. And what we can also do again is we can give what we try to do, like I mentioned earlier, we are flexible at PAC Asset Management, and we can give you flexibility. If you have the naira equivalent, what we can also do is to help you convert that fund to USD at an agreed rate, and we also ensure that you are in the know of how we intend to do that for you. So if you have some naira and you want to make your investment in USD, you can come to us, and then we can source for USD for you if you have if you agree to the rate, and you're fine with it. So that's another way we can make it easy for you.
Okay. So thank you, Mr. Emmanuel. I guess you sort of had the answer to your question. PAC can help, right? If you need help with it. Okay, it seems like we have sort of slowly come we're at the end or close to the end. Okay, I believe I can still take one or two general questions, okay, that I have there. Right. Says, how do I balance the need for quick access cash with the higher returns that usually come from locking money away? How do I balance the need for quick access to cash with the higher returns that usually come from locking money away? So usually we lock the money away, and now people are saying they want quick. So how do you balance that? Right? Because the more you keep the money, I believe the longer you keep the money, the longer the returns or higher the returns you get, right? So they're then saying, how can I balance when I want some quick spending? So, what do you say?
Okay, thank you very much for that, Tim. So, you'd find that that's where diversification comes in. So, for mutual funds, we have different kind of mutual fund products at PAC Asset Management Limited. So, again, this is where you need to have investment goals and investment strategies. That's why we say when you come to us with your investment goals, we help you align it with various investment strategies. So, for instance, Eric talked about the money market fund. The money market fund is a short to medium term investment. It gives you quick access to your fund. So if you're saying that, oh look, I want some monies locked away for a long period, then I want some monies that I can use maybe when I have emergency, where something I can have quick access to. So the money market fund comes into play. A dollar fund now, on the other hand, you're looking at, something for a long term. So you're saying, okay, this is how I want share my portfolio. For the dollar investment, I know it's a long term investment. I'm not looking at taking at any point from it. Then the money market fund, I know that, when I need quick cash, I can easily come to that. For us, our redemption process in the money market fund, we usually take about 24 hours, 24 working hours. So, and with very minimal pre-termination charges, as long as you've kept that money with us for 30 days. I mean, there's a 30 days withholding period. So after that, you can come in and out of the fund. You don't have to take everything. If you want to, you can add to it as often as you want to, and then you can take some part of it, all of it, when you want to. So it's just about coming to us with what your goals are, and then we help you align it with our various investment strategies.
Okay, that's amazing to know. So with money, I hear her, right? She's saying diversify is the best thing to do. Do not put all your eggs in one basket with investment. Spread it across various investments. And she's then helped us to see that with money market funds, you can have quick access to the cash that you need. Break it, take some out of it, put it back, add more, with it. So you have the solutions right there. And PAC has said they can assist you with it. I will give the last question because of time so that we do not stretch people too much and also give too much information, load them too much information. So the last question here says, beyond returns, what red flags like font size, track record, or regulator warnings should the average retail investor watch for in Nigeria today? I mean, we've heard of scams, we've heard of stories of people putting money in and they don't get it out. So it is one big problem that we have, especially within the Nigerian space. So please speak to the red flags so that everyone is, aware. What red flags should an investor watch for in Nigeria today?
Sorry, could you take the question again?
Okay, so beyond returns, what red flags? So he's tried to give various examples like font size, track records, or regulator warnings. Should the average retail investor watch for in Nigeria today? That's just speaking to helping people know what they should, what to avoid scams, because we have a lot of that. So please go ahead. Thank you, Deborah.
Okay, thank you very much, Timmy. This is a very good one, because you find that a lot of people have, fallen victims of, different investment schemes. And one thing I can say is that some of the red flags you can look out for is, um, if the returns are too good to be true. I know this person mentioned that, assets from return. The truth is, it always boils down to returns.
Mm.
And as an average human, we are very greedy. That's the truth. So if the returns are too good to be through, especially if you are promised too good to be through return within a short period, so you get someone telling you that, oh, come to me, I'll give you maybe a 30% turnover in less than in less than 60 days, in less than 1 year. I mean, that should be a major red flag for you. You also want to look at the track record of a company. And the truth is, there are several ways to look out for track records. And I always tell people is do your due diligence. Where a lot of us are lazy. You can go online, you can go on websites, you can go on the Security and Exchange Commission. You can easily find the track record of that company for a long period of time. So for as long as the fund has been in existence or that company has been in existence, if it's 20 years, you would see their track record there. You know, and then you find that most of these Ponzi schemes, they don't have Security and Exchange Commission licenses. So you make sure you can always verify. If you go to the office and you ask them, "Oh, show me what your SEC license looks like, or what's your what do you have a SEC license?" Request to see them. If you see it, it's easy for you to verify on the SEC. Ask for their registration number on SEC for the SEC license. You can easily verify these things. So it always boils down to if they belong to a regulatory body. If the returns are too good to be true, the truth is that's a major red flag. I always tell people that investment is not magic. It's a process. you know so and another thing is that if you don't understand the investment, ask questions.
Yes.
I've had people who it took them 6 months, 5 months before they were comfortable to come to invest, because they asked a lot of questions. So ask questions. From there, you'll be able to understand if this person or if this company is fake or real. So ask questions. So that's why I always admonish people again to always don't be lazy to do your research. I mean, you can just, your leisure, just type what is money market fund, what is fixed income fund, or how does investment work in Nigeria. All of these things, and you're also able to, gather knowledge. So when you get someone come to talk to you, you can easily, know the questions to ask. Thank you.
Yes, thank you so much. So yes, I totally agree with you, Deborah. Just to mention that on nairaCompare, we have in our blog section like insight into how you can spot or a scam um, investing company or investment company, or even loan sharks. Or we have such articles there. You might want to go there and read in depth. So she's very correct about the returns, and I know Nigerians, we like to follow the crowd. Where you see, oh, everyone is running there. You're not fully informed, you just want to jump into it. Please, let's be fully informed, which is one of the reasons why we have partnered with PAC on this webinar to give you the right information to help you make the right decision. It has been an amazing session. I must say, I believe everyone on the call would agree with me. A powerful time. And what I have heard is that we should diversify, we should stay informed, we should act with wisdom and not panic, right? And we are available to help you through the process, whether nairaCompare or PAC, available to help you through the process, to handhold you so that you can make the right investment decisions. I want to really thank you, Deborah and Henry, for taking our time to be with us today and for sharing from insights into how we can begin to make smart money moves. I'd let all of us know that the webinar will be coming up from time to time with, of course, various top-rated providers so that you can have a clear picture and it would help you make the right decision. So thank you, a huge thank you. I'd like to ask everyone to please use the clap or round of applause emoji to just thank our experts here today, Henry and Deborah. Thank you, thank you so much. We do appreciate you. Thank you for your time. Okay, so we know that we're randomly selecting the first 20 attendees to get the free credit score. We'll reach out to you. nairaCompare is a trusted brand, so we do not go back on our words. So we'll reach out to you via an email if you are amongst the first 20 to get here. Your full credit report will give you a clear picture of your credit standing, and it would help, of course, with your loan approvals. So what next? Next is for you to take action. That's what next. What should I do? Take action. We have in fact linked to the products for PAC for you to go and take action. The taste of the pudding is in the eating. It's not really in just staring or amassing information. Do something with the little or money you have. Don't spend it all. It can grow. We clearly saw the amount your money can generate. So I would like to thank you so much for joining us today. We hope to see you again next time. Keep investing, stay informed, and God bless you. Thank you. Thank you, everyone. I'll see you again at the next webinar. We'll have a great day.
Thank you
Thank
very
you, Henry.
much.
Thank you, Deborah. Thank you, everyone. Thank you. Thank you all.
Thank you.